We got a big reaction from the mortgage market to today's jobs report. Let's get to Diana Olick with the very latest on that. Diana.
Melissa, this is the biggest one-day drop in rates since August of last year. The average on the 30-year fix dropped 16 basis points this morning to 6.29%. That, according to Mortgage News Daily. And that is the lowest rate since October 3rd of last year. So we're finally breaking out of this high 6% range that it's been in for many months. Mortgage News Daily's Matt Graham also says many lenders are priced better than this at rates of 6.125%, and many lenders will be quoting in the high fives today. So it's a major difference from May when that rate went over 7%. So let's do some math here. If you're buying a $450,000 home, which is around the national median, using a 30-year fix with 20% down and not including taxes or insurance, your monthly payment at 7% would be $2,395. Today, it would be $2,226. That is a difference of $169 per month. Now, that might not sound like a ton, but it's definitely making the homebuilder stocks happy. Names like Lennar, D.R. Horton, and Pulte, those first two up over 3% on the day. And how about the home building ETF, ITB? It's been running hot for the last month as rates move slowly lower. It's up close to 13% now over the past month. The big question is, will this be enough to really get home buyers back in the market? Rates, as I said, have been falling all month slowly, and mortgage applications to buy a home, they have not really responded. Some say you got to get a 5 handle on that rate to really make a difference, given how high home prices still are. Guys, back to you.
And I guess that was sort of my next question, Diana, and that is, the drop that we saw in today's mortgage rate is based on a drop that we saw in rates days before. And so when we see the 10-year yield right now at 4.0+%, we could see that show up in even lower mortgage rates next week.
It could be. Look, mortgage rates loosely follow the yield on the 10-year Treasury, but not directly. And there are a lot of other things impacting it, like what does the future look like? What do mortgage buyers, those buyers of MBS, think about the future? And you talk about the CPI, et cetera. So there's a lot that plays into these rates. But really, if you're focusing on that home buyer, they're concerned about prices. They're also concerned about the broader economy, uncertainty, jobs, et cetera. So that plays into it as well. Yes, you do buy that monthly payment and, you date the rate, they say. But again, it's going to have to be, are they feeling good about their personal, economic, financial situation to make such a big investment, which is a home. It's the biggest for everybody.
Right, exactly. The confidence piece is huge. Thank you, Diane.